Hello, I'm Dan, the Lettings Director at the Property Centre in Taunton. If you are a buy-to-let investor or a property landlord, there are two main ways you can make money from investing in property. One of them is cash flow, and the other one is capital appreciation. Now, cash flow is essentially what the yield is on the property. It's how much profit you're making per month after expenses. If you're a landlord that wants to be rich today, perhaps you are an older landlord who's just cashed in your pension and you come to me saying, I want to invest in property that is going to put as much money in my pocket as possible on a monthly basis, and I want that money now, I don't have to wait for it, I would recommend chasing cash flow. This is where you buy smaller properties that are less popular with owner-occupiers that typically give a better yield. Some of the flats in Fireport are a great example of this. They give great yields, or studio apartments typically give fairly good yields as well because they're not super popular on the sales market, but do very well on the lettings market. Alternatively, what you could look to do is a multi-let. So you could buy a property like a Victorian mid-terrace that's got a couple of really good reception rooms on the ground floor, a couple of good double bedrooms upstairs, and maybe the loft has been converted or has potential to be converted. If you can get 5 or 6 lettable rooms from a property like that, you can let the property on a room by room basis as a HMO, a house of multiple occupation. Now in Taunton at the moment, for a property like that as a whole let, so if you're letting out a Victorian terrace property with 2 or 3 bedrooms, conventionally, you can look to achieve around 1,300 per calendar month. However, letting it out on a room by room basis, you can look to achieve around 650 per room. That is a return closer to 3,500. So much more money per month. Now, it's going to be harder for that money because you're going to have to do more for maintenance, you can have more turnover where people leave HMOs more often because rooms are a lot easier to grow out of than a 3 or 4 bedroom house. But ultimately, as much as you will have to work for it a little bit, you're going to make quite a bit more money on a monthly basis. Problem with that is it's a little bit of the antithesis of capital appreciation because you have to go into that property and alter it to set it up as rooms, thus making it less sellable as a conventional home. So what you're making in one hand, you're potentially losing in the other. So if you're going for this method, it's really important to be aware of that and be prepared to make more money in capital monthly cash flow than what you are going to in capital appreciation. Now, if you came to me with a slightly different strategy and said, look, I've just had this crazy amount of inheritance, I'm young, I want to invest and safeguard my retirement, but I don't need to be rich today, I can be rich in 10, 20 or 30 years time. What I would then recommend that you do is pick properties that have a better potential for capital appreciation. So for instance, say you purchase a property at 300,000 and that property consistently performed at 5% interest appreciation. In 30 years' time, that property will be worth a staggering 1.2 million. If you can play the long game with property, it can seriously pay off, especially if you buy a property that lends itself well to capital appreciation. Some areas in Taunton that are particularly good for this are, your houses in Dalmington, anything similar like the 1930s semi-detached properties that are in the Bishop's Foxes catchment. They're super sellable and have good trajectory for growth in the future. So those would be the kind of properties I'd pick if you're looking for more capital appreciation, the ones that are really, really sellable and show good trajectory for future growth. Now, if you're a buy-to-let investor, whether it's your first or 100th property, I can help with both of these. With cash flow, I can do best price guides for you so you can see what similar properties are renting for. I can do yields, and I can also give you a good idea of net yields, where we account for maintenance fees and turnover, how much that property is likely going to turn over in a 5-year period. So I can give you a really good idea as to what it is you're looking to get from a buy-to-let investment property. I can also cherry pick properties that lend themselves very well to HMO conversions in areas that are really popular with HMO tenants. On the capital appreciation front, I can look at historical sales data. So if there's a road that you're particularly interested in where you might have spotted a property, I can see what properties have been selling for on that road. I can get a feel for what the kind of trajectory is going to be like. I can look at concurrent sales data to see what things are selling for at the moment. And also, as an estate agent, we do this for like 50, 60 hours a week. You get a good feel for the kind of properties and the kind of areas that are performing particularly well in Taunton. So I can also give a little bit of insight as to that's a fantastic area. Buyers absolutely love that area. There's good investment in that area as well. There's a good predictor for future growth. So whether you're buying for either of these, I'd absolutely love to help. If you're a buy-to-let investor or a landlord, please get in touch. Share with me why you're investing in property, what you're looking to achieve from investing in property, and I will find a way to help you and be of service.